The humid Lagos air pressed in. Inside the sleek Eco Tower, executives gathered, their focus oil and gas strategy. The year was 2025. Global markets were a swirling vortex. Uncertainties abounded everywhere. Africa was key to their plans. This meeting felt pivotal. Decisions here would echo far. They needed clarity. They needed a path forward.
Sunlight streamed into the conference room. It illuminated maps of Africa. Data flashed on large screens.
The world is changing rapidly, she stated. Our energy markets are too. We see risks. We also see opportunities.
She paused, letting her words sink in. The team listened intently. Their notebooks were open, pens were poised.
Adebayo gestured to a chart. It showed fluctuating oil prices. Global benchmarks dictate much, she explained. But local factors shape our reality. We operate in a complex web.
Her gaze swept the room. She met the eyes of her top traders and her regional managers. All knew the stakes were high. Africa's potential was immense. So were its unique challenges.
Our task today, Adebayo continued, is to forge a robust strategy. One that respects global signals. One that understands African specifics. We must be nimble. We must be informed.
The team nodded in agreement. The challenge was clear. The day would be long. Discussions would be intense. The future of their African operations hung in the balance. This Lagos meeting was crucial. The global oil market is vast. It is a complex machine. Billions of barrels move daily. Prices are set by key benchmarks. Brent crude is one. West Texas Intermediate is another. These are like global barometers. They reflect supply and demand. They signal market sentiment. Traders watch these benchmarks constantly. Their movements drive decisions worldwide. Every shift has implications. Financial markets play a huge role. Oil is not just physical, it is also traded on paper. Derivatives and futures contracts abound. These instruments manage risk. They also allow for speculation. Major trading hubs are vital: London, New York, Singapore. These cities house exchanges. They are nerve centers for energy finance. Billions of dollars change hands. Speed is of the essence. Global demand for oil has patterns. Economic growth fuels consumption. China and India are huge consumers. Their appetites shape the market. Seasonal changes also matter. Winter brings higher heating oil demand. Summer sees more gasoline use. These cycles are predictable. Yet unexpected events occur. Geopolitics can shift demand suddenly. Technology also influences consumption trends. Many players shape this global stage. Supermajors are powerful. ExxonMobil, Shell, and BP are examples. National oil companies also wield influence. Saudi Aramco is a giant. Rosneft of Russia is another. Commodity trading houses are key. Vitol and Glencore move vast volumes. Critical choke points affect transit. The Strait of Hormuz is one. The Suez Canal is another. Disruptions here cause ripples globally. Africa holds immense energy wealth. Its subsoil is rich in oil. It also has natural gas. Nigeria is a major producer. Angola has significant reserves too. Algeria is a key North African player. New discoveries are emerging. Countries like Mozambique and Senegal show promise. This resource endowment is a blessing. It also presents complex challenges. Managing this wealth is critical for development.
Infrastructure gaps are a major hurdle. Many African nations lack pipelines. Refineries are often old or insufficient. Storage capacity can be limited. These deficits hinder efficiency. They add to operational costs. Moving oil and gas can be difficult. Getting products to market is key. Investment in infrastructure is vital. This requires capital and expertise. It is a long-term commitment.
The players in Africa's market are diverse. International oil companies are present. They bring technology and capital. National oil companies protect state interests. They partner with foreign firms.
A new trend is emerging. Local independent companies are growing. They seek a larger role. This creates a dynamic environment. Competition and collaboration coexist. Each player has different goals.
Regulatory environments vary greatly. Some nations have stable frameworks, others face political uncertainty. This instability can deter investment.
Local content laws are gaining prominence. These laws aim to boost local participation. They want more jobs for citizens. They seek more contracts for local firms.
Balancing investor needs with national development is crucial. This is a delicate act. Section 4. The Great Interplay: Global Forces and Local Realities.
Global price shifts hit us directly. When Brent crude rises, our export revenues climb, but our import costs for refined products may also rise. This was the double-edged sword. African economies felt these swings keenly. Planning needed to account for this volatility. Every dollar change mattered significantly.
Consider transit choke points, a strategist chimed in. A disruption in the Suez Canal seems distant, yet it impacts shipping times to Asia. It affects tanker availability globally. This could create logistical nightmares, or it could open short-term windows. African producers might find new buyers, or they might face higher freight costs. Global events had local consequences, always.
Global investment trends also shape Africa. The push for cleaner energy is strong. Environmental, social, and governance (ESG) factors matter. Investors scrutinize projects closely. Financing new oil and gas ventures is harder. Yet, Africa needs energy for development. This creates a tension. How to attract investment? How to meet climate goals? These were tough questions.
Local realities could also reshape global views.
A new discovery in Namibia could draw global attention southward. New regulations in Nigeria might shift investment patterns. We must track these local signals. A stable political climate attracts capital. A sudden policy change can repel it. The interplay is constant. Global strategies must adapt to local ground truths. It is a continuous feedback loop.
Section 5, Strategic Imperatives, Charting Success in the Oil Maze. The Lagos meeting neared its end. The discussions had been exhaustive, the complexity was undeniable. No simple answers emerged. The team understood this clearly. A one-size-fits-all global approach would fail. It would miss Africa's nuances. It would overlook specific opportunities. Success required a more tailored vision, a vision born from deep understanding.
The core imperative was integration. Global market signals provided context. Local African realities provided grounding. Political shifts in a country mattered. Community expectations were important. Infrastructure status was critical. These factors had to inform every trade, every investment decision. Ignoring them was a recipe for failure. Wisdom lay in blending these perspectives.
Flexibility was another key theme. The oil and gas world is always moving. Geopolitical events can erupt suddenly. New technologies can disrupt old ways. Consumer preferences can change. A successful strategy must be adaptable. It must be able to pivot quickly. Rigidity was a weakness. Agility was a strength. Constant learning was essential.
Ultimately, navigating the global oil maze is hard. This is especially true in Africa. The continent is dynamic and diverse. It offers immense rewards. It also presents unique risks. Vigilance is paramount. Insight is indispensable. The best strategy is globally aware. It is also locally grounded. This balance is the true north. It guides companies towards sustainable success.